Persistent liquidations in the ETF space have added to gold's downside pressure, but how much is it also weighing on investor sentiment? Joining us today in studio is Mike McGlone of ETF Securities. Mike, good to have you back on the show.
Good to be back.
So, Mike, let's start with a recap of what's happening in the ETF space this summer. How much are gold and silver ETFs hurting here?
Well, gold ETFs, there's been significant outflows. Total ETF holdings in gold this year are down about 5%. That's over 2.5 million ounces, running around 49 million ounces. That's off from the peak in 2012, around 84 million ounces. So it's down almost a half. Silver ETF holdings have been unchanged and it's basically stable for 2 years. They've been unchanged and still stable.
But market participants here are concerned, saying it's a repeat of what we saw 2 years ago in the ETF space. The question is, how much lower can we go here?
Yes, there's some of that. It's a repeat, but as I mentioned, gold is already down so much and ETF holdings are already down so much. As far as it being a repeat, I think that's unlikely because the way I see this capitulation, I think is the best way to describe it in ETF holdings, is it's just one of the ducks in the pond of the signs of significant oversold conditions in gold and all the precious metals.
All right, Mike. So if we were to look at gold futures, you noted that if 2015 were to end now, it would mark the biggest annual increase in open interest since 2010. What's the significance of that?
That's another duck in the pond of signs of significant oversold. Now, one thing about open interest in gold, my data analysis since 1997 when it was reliable, is open interest in gold has never increased during this period when the price of gold's been down. So we've had a massive increase in the open interest of gold with the price going down. That means new shorts coming to the market. It means the market's getting a little bit extreme and oversold. We've seen the same thing, all-time new highs in open interest in silver, new shorts, and in platinum.
All right, so let's look at a gold futures curve now that you brought me. It settled in backwardation from the first to the third contract last week. This is something you say is quite rare. As simply as possible, can you explain why we should be paying attention to this chart?
That's another duck in the pond, signs of oversold conditions. Backwardation in a commodity like crude oil, that's okay, makes sense, but in a metal or a currency like gold is very rare. So backwardation is a situation when the further out future is a lower price. So that third commodity, that third future is a lower price in the front future. Now they're not as liquid, but it is a sign of oversold in extreme conditions, and generally it's a sign of excessive demand or lack of supply.
Mike, thanks so much for stopping by, but you would say that there's interest back in the gold market now, right?
Oh yes, we've seen interest. We've seen interest from our salespeople, from our clients, and we've been pointing out some of these key facts and this how overdone the market is. The question is, short covering rally should make sense. It's just a question of the duration.
Right. Mike, thanks so much for stopping by.
Thanks for having me.
And thanks for watching this edition of The Gold Report. We'll see you tomorrow.